Hello and welcome to another episode of the Retire While You Work podcast. I'm Miles Zuger, wealth advisor here on the team, joined by Jeri Anne, our director of operations. How you doing today, Jeri Anne?
Good. It's Monday, but it's still a good day. So
Yeah.
starting out the week, well, I only have to work 3 days this week because then there's a holiday and then I'm taking off. So it is a good day.
Yep. There's a bank holiday in the middle of the week, Juneteenth this week.
Mhm.
So relatively new
Mhm.
holiday, but it is one that the banks recognize. So when the banks are closed, typically we get a nice little day off on those days for the most part. So
Mhm.
looking forward to that as well. Hopefully it's not going to rain. I feel like we've been getting a ton of rain. So we'll see
Oh
what
my
happens.
gosh, so much rain.
But today, topic of the day is money fears and discussing just all things fear around money. I think it's one of those. I think it's probably one of the bigger reasons that people work with us. It's they're afraid to manage their own money, afraid they don't have a plan, afraid to lose money, afraid they don't have enough money, afraid of making a big mistake without somebody helping them out. Um,
And
and
I
I think
think,
that's
go ahead.
I was gonna say I think that's where we do a really good job for our clients is helping them helping them create a plan, realize that they're okay, all the above on kind of helping to calm those emotions and those fears and making them realize that at the end of the day it's going to be all right. They've got a great team in place that they can trust, and our job is to help them sleep better at night.
Yeah, and I think the biggest difference that I see is when we first are introduced to people and they've become clients, they have so much more stress and anxiety around money than they do after a few months, even with us, because we have learned how to talk to people about their plan, what not to do, when not to freak out, don't sell stocks when they're down, like all that kind of stuff. And our I think the majority of our clients feel good. Like they do still have some anxiety, especially with things that they are right now in the world. But for the most part, I think our clients are not as anxious and stuff as some people.
I would agree. I think we do. We're probably a little bit biased, but hopefully some of our clients would agree with this. But I think we do a good job of just communicating, which is the biggest thing. It's like, why is the stock market down every now and then? Well, it's because there's a lot of uncertainty in the air and the stock market hates uncertainty. I think it's the same thing for clients or for anybody. We feel these same fears and worries that everybody else has. We're also human, but it's why do you get worried about money? It's because you feel like you don't have a plan or things are just in chaos. And during the good times when you do have a plan and things aren't in chaos, you usually feel generally pretty good about things. Especially, you have income coming in, your expenses are pretty low. That helps to alleviate a lot of fears when you know at the end of the day you have plenty of money in your bank account to cover all those upcoming things.
Hmm. And I think a lot of things that are kind of fueling anxiety right now is just the market volatility, up one day, down the next. We've talked about, people have concerns about inflation, about interest rates, future rate cuts or hikes or whatever, political shifts, like all that media stuff that's out there. Um, that fuels that anxiety, even for people who don't normally have it. That is definitely still kind of fueling the fire there.
Yeah. Yeah. People want to feel secure. They want to feel certain. So when there's a lot of uncertainty, whether it be politically or economically, geopolitically, it just starts to create uncertainty and people get worried that, they're not going to be okay or that some bad things are going to happen. They're going to spend all their money. Their market's going to be down. And like I said a few seconds ago, we feel those same fears and worries. But at the end of the day, I think we do a good job of trying to bring when things are going crazy like that. I feel like we try to do a good job of bringing it back to what we can control because all those things you can't really control. Like maybe you can to a certain extent, but not really. So we like to bring it back to what you can control, which is the financial planning side of things. You can control how much you're saving. You can control how much you're spending. You can, control how you're invested so that if the market does have a downturn, maybe you don't get the full downturn of the overall stock market because you own bonds and you're well diversified. You have cash inside of your plan, which helps to obviously have money for expenses, and like a simple emergency fund, making sure that you have enough in your emergency fund is an easy way when the market's down to, I think, alleviate a bunch of worries. Because if you have a good solid emergency fund and the market's down 10, 15, 20%, you're probably sleeping a lot better at night because you're not relying on your portfolio for your income. You know, you have, you know, 3, 6, 12, maybe even more than that months of cash set aside to be able to cover those expenses. And I think that's where we've seen over the years plans go off track. It's when you don't have enough cash in on the sidelines or in your bank account. And that's really how we start every financial plan. Again, coming back to the things you can control. Hopefully you can, again, control how much you're saving so that when that time does come and you lose your job or you need to have a little work done on the house, the HVAC goes out, you have cash set aside to be able to cover those things in addition to covering upcoming month's expenses that are, just regular life, groceries, gas, cars, all those kind of things. Like it's expensive to live.
Yeah, because I mean, even with all that craziness going on and whatever is worrying you or that you have anxiety over, I mean, even some of our calmest clients during all of this who know just ride it out, they've got their plan, they've got their emergency fund, all that stuff. They still don't like to look at their accounts sometimes. They're still like, I don't want to see it go down, so I'm just not going to look. Now, obviously, when we meet with them and stuff, we look at it and everything's fine. And that's just kind of their way of like, I know it's fine. I know we have a good team. I know we have a good plan in place. So I'm not even going to let this bother me. I'm not even going to look at my balance this month.
And I think when the market is down, it's like, you definitely don't need to be checking it every day, because if you look 3 days in a row and your account's down, you're probably not feeling real great. But, maybe check once a month, like when you get your account statement, just to kind of see how things go. Or maybe you are somebody who, if the market's down, you just don't want to check. So you don't check. And if that's what makes you a better investor, that's probably the right thing for you to be doing, because you're not going to be panicking as much. If you know you have enough cash to meet all your upcoming needs, and you're young and still saving, still investing into retirement plans that you're probably not going to touch for another 10, 15, 20 years, and you're a better investor because you're not looking at your account statements when the market's down, that's probably the right thing for you to be doing.
Yeah. And the the big thing that I hear a lot and that you hear too, I know, Miles, is when the market's down, people, and I wouldn't say they're like freaking out, but they don't like to see it, but they don't want to invest at that point either. And that's like I mean, for us, that's when we tell people that's actually the best time to invest, is because basically everything's on sale. So if you have extra money on the side, if you do have that big emergency fund and it's fully funded and you have any extra cash and the market is down, don't be afraid to put your money in, because
Yeah. I mean, historically speaking, every time, that's kind of a nice disclaimer for compliance here, but every time the market's been down, it has always rebounded and went higher. And so, a cheesy joke, but I've heard before, like, the only store that people run out of instead of run into when things go on sale is the stock market. Obviously, it's not a store and you're not buying goods, but it is, like, you think about when there's Memorial Day sales or 4th of July sales or whatever it might be. Even if things like aren't that much on sale, people are still going to the stores and buying things because they feel like they're getting a great deal. Whereas, when the market's down, it's almost the exact opposite. People are panicking, not wanting, yeah, wanting to pull money out, not wanting to buy back in. And even if you don't have cash on the sidelines, if you're somebody who's employed, you have a company 401k, or you're maybe saving into a non-retirement account, even if you don't have, five or $10,000 or more than that to dump in when the market's down, keep up your regular monthly or as your biweekly paycheck that you're contributing, even if it's just 3-4% of your paycheck that you're putting in there. That's still going to pay huge dividends on the backside, because the market's not going to rebound in just a couple days if it's down 10, 15, 20%. So hopefully you're able to do that for a couple months and add some cash in when the market's down. And it really is the one tried and true tested kind of principle is, whenever the market, and we have all the charts to show it, but whenever the market's down 10% or more, historically, if you've added cash, that's been a great time to be adding into the market. So that's, yes, can it be hard when market's down and you have fears about where it's going to go from here? But even if it goes a little bit lower, well, you still bought things at a 10% discount than what it was previously when it was at all-time highs.
And what we do, I know you and I both do it, and David and Carson and everybody else here that has investments, and a lot of our clients just put it on auto that every month they have a certain amount that pulls out of their account right when they get paid or whenever it is, that just automatically goes in every month. So your dollar cost averaging. So then you don't have to worry about, is the market up, is it down, is it, you're getting your money in either way. So that's good.
And it alleviates the figure out what the right percentage for you to be saving is. But it's like, if you're doing that regularly and then there's a month where like it's your birthday and you want to treat yourself a little bit, you can go do that because you're already saving systematically. You don't need to worry about like at the end of the month, oh, I have to have an extra few hundred or a few $1,000 to be able to put into my investments. No, you're already handling that as its own standalone budget item in your plan, to where you can go have fun with friends or go buy yourself some new clothes or whatever it might be, or take a trip without having to worry about saving.
And I think a lot of younger people don't fully understand when they open an investment account. I don't think they fully understand that if it's not a retirement account, if it's just a regular individual brokerage account in your name or jointly in you and your spouse's name, that is really an extension of your emergency fund. So if you have some fear around, what if I run out of all this cash that I have for my emergency fund? I mean, and you've got this other account set up, you can use that. There's no penalty. I mean, you would pay, if you made money in it, you would pay capital gains taxes on any of the gains. But that is also a way to sort of alleviate some stress, is to have that type of account set up too.
It's like if you're putting money in a retirement plan, there's like, to your point, it's like the fear, I can't touch that, I'm going to be tax penalized. Well, that's where, bringing it back to the three buckets that we always talk about with clients: bucket one, emergency fund; bucket two, that flexible kind of investment brokerage account that's liquid if needed and serves as either a longer term savings, or it can also serve as the extension of your emergency fund, as you mentioned. And then bucket three, which is all retirement plans, which are meant to be that money you're not touching. If you're younger, you might not touch it for 40 years. If you're retired, it's where you're maybe taking some distributions from to live on. But having balance in those three buckets, I think, helps to alleviate. One, I think it helps people feel like they have a plan, which, I mean, you do have a plan if you have the three buckets built out. And then it also just helps alleviate fears, because you have got bucket one for this, bucket two for this, bucket three for this. And I think that's the biggest thing. People get the most fearful when they don't have a plan. If you feel like you have a plan, it's going to make you, I mean, I think just better all around. Probably makes you a better spouse, a better parent, a better investor, all those things.
And if something is happening out there that's causing you stress around money or whatever, I mean, always go back to the plan, and review the plan. Let's see, is there anything we need to talk about? Is this still working? Why are we afraid of this particular thing? That's going to be your go-to, really, is what kind of plan do you have set up, and how stable is it? And also, don't let like headlines ruin your strategy. Don't invest based on what you see on the news.
Yeah. I mean, I've CNBC on right behind me here, and it's like, they didn't do it earlier this year, but if you look historically, from when they play like I think it's their Markets in Turmoil special. It's like, they flash the graphic across the screen and everybody gets on there and talks about how bad things are. From when they show that, that's usually about when the market turns around. So, it's like Warren Buffett that says, be greedy when others are fearful, and fearful when others are greedy. Meaning, if other people are being scared, if you're able to get a little bit more aggressive in your savings and investing, and when other people are being greedy and everything's at the top, maybe start to just go into a little bit of protect mode. But what else? What else you got?
Let's see. I don't know. I mean, I think we're good on just how to respond instead of react. We talked about, go back to the plan. Don't let headlines ruin your strategy. focus on things you can control, like your savings rate, your spending habits, your portfolio's risk, like stuff like that. And obviously have a trusted advisor. If you don't, I mean, that's probably step one, but those are kind of some ways to respond instead of to react to changes in the economy or the market.
Yeah, I think the biggest thing is that, like, if you're feeling fearful about money, it's valid. I mean, I completely understand on that, but it's also not a strategy. And so, if you're feeling those fears or those worries, I think the biggest thing you can do is just, talk to somebody. It's just a friend who you trust about what you feel for on money, or somebody like a planner who, like us, who works with clients every day, putting plans together. But if you're feeling that way, I think it's a great time just to assess where you're at. And it would probably be my number one tip for people feeling fearful is just assess where you're at and try and get a good grip on everything, and check your cash, check your savings, see where things are at, your investments, and and work to get a plan in place to help alleviate some of those fears.
And give us a call if you need help.
Yeah, and we're always here, available whether you're a client or not, to at least do a checkup, maybe a second opinion if you feel like you have a plan but just want a set of eyes on it. That's what we're here for. So
Yeah.
thanks everybody for joining us here. Another episode of the Retire While You Work podcast, and we'll see you all next week. Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.